Good morning. Today is December 1st. So we just got all of the new data for November, home sales, all of that stuff for Northeast Florida. And yesterday we also had a big day with the Fed. So yesterday, Jerome Powell spoke, and everybody's leaning towards a much lower interest rate hike at like 25 basis points. Um, and from what people are talking about, they're talking about, potentially, zero or start pulling them back Q3, Q4 of next year. Today, in about 10 minutes, we have PCE coming out, which pretty much directly impacts where the Fed goes with their rates. Um, but as Jerome Powell was speaking yesterday, you basically saw the S&P 500 shoot through the roof. So let's look at that. So here's basically the first candle. He started talking at 130, and then from that point on, other than a few little like drops here, which probably shook some people out if they were day trading, basically 394 to 405, 407. Crazy in one day, right? Well, look at what the 10-year did at the same time. At 130, 125, you're at 3.78%. And then by the close, you're at 3.6, and right now you're at like under 3.6. So from a mortgage rate standpoint, if I was looking at them, you're basically you can get a mortgage at 6.5%. And if you're doing a 2-1 buy down, you're getting a mortgage at 4.5%, which is awesome. But let's just go into the numbers and see what November looked like. So with sales price, we are, from a median standpoint, at 346. And so what is that? I said by December, my estimate was 10% from the peaks of this year. On the monthly chart, it's showing our peak in July at 375. On the weekly, it shows it in May, I think. 346, we're at 7.7%. We'll see what December pulls out for us. Now, there's something brewing kind of in the background because one of the mortgage guys looks at all of this stuff kind of the same way we do. But one of the things that they saw was that mortgage applications shot up pretty dramatically. I don't know the exact number, so I'm not going to say a random number, but that's a pretty big deal. So, and something else that also kind of spiked is buy a home on Google searches. So, I mean, you can go to like Google search trends or whatever and just type in buy a home, and you can see that the search records for that increased a lot. So, those of you that we've basically been saying, hey, don't sell your house right now because you don't need to, unless you need to, we might be onto something. So, let's go to closed sales. So, closed sales are down pretty bad. So the amount of homes that have sold and closed are down. And if you're looking at these bottoms, you can't really look at them till December or January because this is November, right? So if I were to compare it to my other Novembers, I've got this November at 3,000, right? I've got this November at 2,700, this one at 2,201. So what's the difference between 2019 and this November? Basically a difference of 700 homes, right? For Jacksonville, the thing is that that's not really a lot. And if I erased the last 2 years and I were to put this on a trend line, it does look worse than it does look worse than the other years, but it's not that it's not that far off. And I'm not trying to make this like look good. It just is what it is. The other problem that we have right now, I mean, that's September, and that was 1906. So it's 200 home difference. And I don't remember Fortune magazine talking about the market crashing in 2017. Anyways, so the other problem here is this. New listings are also like down in November, right? And obviously some of those closed sales went from, they're coming from September and October, but you can see that they're still down, right? Um, so here's in October 2021, you had 3595 new listings, and our October you had 3826, and then November right under 3000, right? And then so here it's about the same for 2021. But then you go back and look at like the other months, like this is still like down, given that we're in for the past 2 years, we've been in an up market until like the past, 5 months. Um, and now you've got, basically the trend isn't matching like what's going on with closed sales, if that makes sense. So we still don't have a lot of that inventory coming to market, no matter what, you know, what it looks like. And I have a feeling that everything is just going to be kind of in a standstill until the rates drop more. I don't think enough buyers understand that they can get the 2-1 buy downs. And if you can't live with a 6.5% mortgage, that's I get it. It is what it is. Without the thought of basically refinancing later. And I'm not going to tell you that you can do that. Some people are thinking interest rates will get into the 10. So at that point, if a 6.5 is bad, you should keep renting. So that's new listings. Percentage of cash sales. I think that this is also telling of what's going on in the market. We still live around the 30% number, 29%. So almost 1 in 3 houses sell for cash in our market. That's crazy. Let's take a look. Everyone waiting for the foreclosure crisis, including the Go Banking article that I posted about. Okay, so we have actually gone up in distressed listings by 100%. From our 0.1%, we are now at 0.2%. There's not enough for me to even worry about that. Not even close. And we work with groups and institutions that want to buy these houses at the auction, and so we watch the auction. We pull it every Monday, look at what's there, and there's nothing there. It's not even worth putting in the time to buy the stuff there. So days on market, that's important to you guys. So we're at 47 days on market. On the weekly charts, we did see that number come down. I would say let's check out the ranges for what happens in the next 3 months. I want to see what happens in Q1. I think that's going to kind of tell me more about what's going on. From a price distribution standpoint, this is, and we'll start using, a lot more of this if you guys want to see it, but keep in mind, this is just last month. So your houses over $1 million, over 1.5 million are on the market longer. But from a bottom of the bell curve standpoint, if you're from 1 to 1.5 million, you're at 21 days. So the houses that are on the market the longest are 400 to 499. So that's an interesting way to kind of look at it. So houses on both sides of the spectrum are kind of doing better, at least in November, than your middle of the road houses. Yeah, so those are 45 days. And let's see, percentage of list price received. So in November, you're basically looking at an 83% under 100. These are still really ridiculously high numbers. Now, if you are selling a house, steal our strategy from the flipping that we do. Price it aggressively. And when I say aggressively, I mean you have other houses in your neighborhood that are listed for 600. List yours at 575. Get more eyeballs on your house than the other ones. And it's we call it the honeypot strategy, or Carrie calls it the honeypot strategy on the retail side. But it's kind of a Walmart strategy. And I know people don't love this reference, but what Walmart would do is they would come in, and in order to eliminate competition, they would lower the prices of the same items at nearby stores. Those stores would go out of business, and then they would raise the prices. Whether it's good, bad, whether you like it or not, that's just what the strategy was. So when you're listing your house, you come in lower, you get multiple offers with the intent for that to go up. No matter what I list a house for, whether it's $1 or $1 million, the market's going to tell you what it will bear and what it believes that it's worth. I love how this graph looks like the market is just tanking, but it's not. It's just the difference between 101% and 96 makes it look like a very dramatic move, when normally you're at 97% for the past, 5, 6 years. But whether no matter what you list a house for, a million or $1, the market's going to tell you what it thinks it's worth. So if you've got a bunch of houses around you sitting at 500 and you list yours at 475, if the market is appealed to it enough, they're going to give you more than 475, right? So would you rather be 500 working your way down, or would you rather be 475 working your way up, picking between multiple offers, picking between pre-approvals, lenders, all that kind of stuff? Something else that I thought about, and you might be able to see it in my little tabs actually, but the percentage of renters in Jacksonville, Florida is 44%. Nationwide, that number is 34%. I was talking to somebody yesterday where, from a pricing standpoint, we did not see the same crazy numbers that Arizona and Tampa and Miami saw. So like we're still kind of like a hidden. It's like we're not the cool kid yet, but like we saw some. It was like a sympathy play for Jacksonville. But Jacksonville has so much awesome stuff going on. Like yesterday, we've got a new medical school coming in. We have a lot of medical industry, logistics, and like that's like it's a big part of the city, and like of course military, because we've got 2, 3 bases here. But we're still kind of like hidden for some reason, which is good and bad, because the higher these markets go, the further down they fall. But even in the midst of all this happening, we've still got all of this stuff coming to Jacksonville. And I thought about this. Sometimes I'm not telling people it's a good time to buy or sell, because honestly, your personal situation makes it whether it's a good time to buy or sell. For a retail customer, from an investment standpoint, we're still in a position where, would we like to accumulate properties for wave number 2? Because in our opinion, wave number 2 is coming, right? The articles kind of control the way 90% of retail looks at the real estate market, right? So they buy the hype and they sell the fear, right? So everybody, people talk about the market going down, and what happened? All these listings came out of the woodwork, right? Even though, it doesn't look like a lot of them did. People, the conversations about listings started coming back up. People want to hold when it's green and sell when it's red. It's just a psychological thing that retail does. So if you're an investor and you're looking at this, and you're either using cash or you can leverage some of that cash, right? You are in a position to buy where no other people are. And the thing is that you've already seen the cash numbers. People are already doing that here in Jacksonville. And so we don't want to go out and say, and I don't mean this in a bad way or good way or however you want to look at it, but like we almost need the people that are saying that it is not a good time to buy, because 44% of our market is renters. 44% of the people living in a house in our market are building someone else's wealth or their equity or paying off their bills. Like it doesn't matter. Like it's actually like it's a great market for rentals, whether it's from a transitory standpoint or a retail mindset standpoint, however you want to look at it. Because people come here for school, jobs, whatever. They may not live here forever, right? So maybe they don't buy, which is great. But it just goes to show you that from a national standpoint to a local level, we have less homeowners than people do from a national standpoint. So it's a great market for rentals. Um, because there's like proof of concept like right there. But I hope that was helpful. And if you need anything from an investment standpoint or even a retail standpoint, obviously Carrie and the team can help you list or buy or whatever you want to do. Um, and we talk about these numbers in all of our sales meetings. And yeah, let us know.